This is mxux. This is an update on the FOXCONN Lordstown deal. I'm going to go through some factors regarding FOXCONN that may be affecting this deal. First up, we have this article. This is from the BBC. This is dated May 6th, so this is relatively recent information. Just reading this here. FOXCONN says revenue slipped last month by 11.65%. So that would have been in April of this year, and that certainly would have been a factor regarding the deal with Lordstown that was out of Lordstown's control. Now, they have mentioned in this article that in February sales were up, and that this cut in revenue was from the Shanghai operation reopening after COVID. Be that as it may, likely a demand factor as well. Whatever the case may be, the most recent revenue dropped almost 12% for FOXCONN right before they queered this deal. So let's move on to the next factor here, which involves the Honhai acquisition of Sharp Electronics. Again, beyond the control and scope of Lordstown Motors, but perhaps influencing the Lordstown Motors FOXCONN deal. Okay, this is mxux. This is May 23, updated 3 days ago from Reuters. FOXCONN global deal making suffers sharp shock. This mentions Lordstown Motors. It's about Honhai's acquisitions revolved around expanding their business beyond the iPhone. Let's just take a look at this article here. This is the Sharp logo. That's a brand, a Japanese brand that Terry Gao took on to turn around. Just a brief history, 2016. Honhai rescued the Japanese electronics group with a promise to turn it around. In the last 6 months, they have a $1.6 billion write-down. Cast down on Taiwanese groups, that's Honhai's grip on its investment and its ability to make similar deals. This outcome may be tempering the decision to working with Lordstown Motors, and they mentioned that. Terry Gao was behind this. He took on the Japanese electronics maker because the Sharp display technology, and they had some great TVs, he felt was better. FOXCONN's turnaround efforts initially paid off by 2018, with Sharp was back in the black. That's under the joint JV, I guess, with Honhai. Now this just happened, yet Sharp's unexpected first annual net loss in 6 years raises awkward questions. The Japanese company equity value now just $4 billion, and has delivered a total shareholder return to shareholders in Japan of minus 26%. Since FOXCONN took charge, Japan's index has returned a 96% gain over the same period. And it says here that analysts say that FOXCONN's trying to pull away from the iPhone, but more than half of FOXCONN's annual sales are still from iPhone assembly and so forth. So this most recent loss after the successful turnaround has really hit Sharp and Sharp shareholders with a drastic decline. Sharp's financial woes stem from a display subsidiary it acquired last year. Now again, Terry Gao bought this because of their Sharp's display technology. again, this is an acquisition. Now, some Japanese board members opposed this acquisition, but were ultimately overruled by FOXCONN. The troubled unit was once a joint venture between Sharp, FOXCONN, and an entity tied to Gauss. So it sounds like some family business going on there. Sharp did not want this acquisition, but it looks like FOXCONN forced it. FOXCONN insists it does not have a majority vote in the Japanese company, which operates independently. Yet filings show that of March 2022, FOXCONN and its affiliated companies held a combined 52.6% stake, although that has probably come down since. So this is a similar stake that would be involved in the Lordstown Motors deal. I don't believe it's a majority stake, but FOXCONN would be the largest shareholder and also hold 2 rubber stamp seats on the board of directors. Here it just states that they owned a 52.6% stake, which is a little different, but it shows the controlling, possible controlling interest from FOXCONN. The Sharp mess is more than a historic embarrassment, as FOXCONN is now boldly diversifying into electric vehicles. Liu Young, who took over from Gao in 2019, striking deals all over the world, Thailand, looking at India as well, to become a manufacturer of cars, as well as the chips and batteries that go into them for global automakers. This is their contract design manufacturing service, where Honhai is going to supply the parts and build the vehicles. One of those deals is already souring. Last November, FOXCONN agreed to buy a near 20% stake in U.S. electric truck maker Lordstown Motors. Again, this is they would own all the preferred stock and 20% of the common stock. I believe you have to research this deal on your own. I don't have the figures at the tip of my finger, at access right now. So, but the deal is now the deal that FOXCONN has backed out of because of the delisting of Ride, who has performed a reverse split. The 2 sides are now in a bitter dispute, and the cash-out upstart warned it might be forced to file for bankruptcy. FOXCONN's deal-making is looking less than sharp. So what the author is implying with this article is that FOXCONN has screwed up this Sharp deal, and now I am of the opinion that may be cascading down into them balking at the Lordstown deal. This may have been a factor in them balking at the Lordstown deal, although it's 2 totally separate entities. Perhaps they're gun shy after the Sharp deal. Anyway, I thought this would be of interest regarding the Lordstown Motors situation with FOXCONN, which is, again, they had a deal. The deal was basically funding in a total amount of 170 some million, also buying a 20% stake in the common stock of the company and owning all the preferred stock, and in effect becoming one of the largest shareholders, I think perhaps the largest shareholder in Lordstown Motors, and 2 rubber stamp board seats. FOXCONN has backed out of that deal because of the stock price of Lordstown Motors dropping below $1, which I think was forced by BlackRock. I have a video on this. You can look at my video catalog. I think there is a political dimension to the Lordstown Motors stock price that has little to do with the company or its product or its management. In any case, this is an update on Lordstown Motors. Again, this could be tangentially a factor in the disposition of Foxconn on the Lordstown Motors deal. This is just a graphic they've put together, the Sharp rebuke. Sharp's shareholder return since 2/4/2016. Sharp, after the rescue by Honhai, similar to what they're doing or plan to do with Lordstown Motors, Sharp, as a result of that, their return to shareholders is down 26%. Honhai has their return to their shareholders has gone up 55% since then. And by comparison, the Japanese market has returned 96%. So, that's an update on the Lordstown Motors Honhai deal. This Sharp experience may be making Li Young gun shy. We'll see how this deal works out. Lordstown has done a reverse split. Their stock price is well above $1 a share. It's over $3 a share, which would seem to satisfy all the parameters that Foxconn was demanding to go forward with the deal. Lordstown Motors says they are open to do a deal, and we'll pursue legal avenues if one's not done. This is an update. This is mxux. Good luck in the market.